From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Well, hello. Welcome to the COB, all of the stuff you need to know about the day in business and markets. I'm Nadine Blaney because I'm going to presume, Kyle, that you know a lot about the day that's been in business and markets.
I've been trying to keep across it as best as I can, or at least as much as you need me to do to get me employed. So
yeah, well, your paycheck's en route, okay?
It sounds good, but yeah, actually a pretty quiet day, it has to be said, from an index point of view, right? Yeah. We've been talking about low volumes, a lack of volatility, not much of a directional bias. That's still the story today, but well, I suppose M&A activity has been the most interesting thing. I know we'll talk about that over the next 20 minutes or so. Yeah,
but you're right. It felt a little bit lackluster out there today. I don't know if it's the weather as well in Sydney playing out, but I did note your optimism in the previous hour, calling this a mildly positive day. Yes, it is mildly positive. Of course, that is the COB Australia Index. Now the curtains have come down. We're just waiting for the final match out for the S&P ASX 200. But you're bang on. When I was picking these sort of three themes for this afternoon, I went with M&A Monday, a flat finish just to rub it
really
in a bit. But yeah, M&A Monday, and obviously we've got a lot of Fed speak coming because again, the overarching theme is what will happen to interest rates, not just in the States, but here as well. We had NAB today revising its call for interest rates to peak now at 4.1%. So that's at least one more hike. I spoke with Brad King from Armitage Private. You know, they're anticipating there's going to be at least a couple more hikes. So again, this is so important for how you make your investment decisions.
Yeah, definitely. And I mean, a lot of talk today, of course, on the big picture as well as just across guests as well, is there's this notion that the higher they hike, the quicker they might have to cut eventually too. And that's being backed up in rates markets where 75 is in the curve for the Fed before the end of the year, and well, a couple from the RBA too. So a very precarious environment, very uncertain, of course.
Sure is. All right. So when we think about these themes, we'll keep them in mind when you take a look at what happened here today and some of the sectors that moved this market. I started with the negative, just because it's not normal.
We're playing good cop, bad cop today. You can be bad cop,
I'll be bad cop. ANZ, but keep in mind trading ex-dividend. And Macquarie, interesting to see further pressure coming on the price of Macquarie. And I know I've said this before, but I do recall, Adam Dawes at Shaw and Partners saying anything under 180, it's a buy. Okay. And so it keeps coming under pressure. The REITs today.
Real estate's done reasonably well. Charter Hall up 3%. I didn't see any news necessarily for Charter Hall in particular, but some strength coming through there. I suppose there's still concerns broadly about financial stability, commercial property going forward as well. So that's swung the sector recently, but up today. Yeah,
well, you had a conversation earlier today, just popped in my mind, about industrials with a gentleman from Morningstar.
Yes, Trevor Hewen, a new guest of ours.
Yeah, it was really good to see him. Actually, we've got him in the COB newsletter. If you don't subscribe, it's really worth your time. It's just what you need to know in bite-sized pieces. But he was talking about brickworks in relation to Goodman Group. I thought that was an interesting convo. So that'll be, it's up online and also will be in our COB newsletter as well.
Yeah, definitely go seek that one out. But let's look at the miners now. And there's still these growth concerns coming through the market. But today, looking much more positive, at least much more positive than the price action on Friday. And I think we may as well shift nicely to the gold space, because you can see Newcrest on your screen there, and there's that M&A activity in gold that's keeping things reasonably well supported now amidst, just all the other things that are making gold glitter right now.
It was interesting because we also heard from St. Barbara, of course. A lot of focus will be on the other players in the space, of course, has exposure to an offer. So Genesis has actually increased or improved the terms of its offer for one of its projects. It looks as if Silver Lake Resources is not getting any love there. So just one to watch, but in keeping with this M&A theme. And then of course, that takes us to some of the top corporate stories of the day. So this is an interesting sort of motley crew here. But it takes us from Tyro, which actually upgraded its guidance, which is a positive. Obviously, I actually don't know what the share price did in relation to that, but if we can bring up that graphic, we've got Tyro Payments on there, and also PointsBet Holdings. So PointsBet Holdings, its shares are down by close to 21%. And that's even after it's sold its U.S. business for $222 million. So the question is, is it shrinking to greatness? I don't know. Is that a thing? Share price doesn't seem to indicate that. I mean, shareholders will be getting some of that money back in their pockets, but it's really remaining focused on its Australian and Canadian businesses. So I spoke with the CEO just a short time ago, so that will be up online.
That's
shortly.
a fascinating one, isn't it? Because US was sort of identified as a growth market as they kind of deregulate their gambling industry. So fascinating that they sold the assets off now. Obviously trading at a premium.
It was costing too much to grow the business in the States.
Right.
Hugely capital intensive, sales and marketing, massive. Do you remember, they did this deal with NBC, which sounded really great, but I mean, if you take a look at the PointsBet Holdings share price in the chart, it's just absolutely been pummeled. So now the big question in market is, so will the Australian operations be sold as well? And Sam said, look, they're always trying to maximize returns for their shareholders.
Open to bids, all right. Don't consider it a solicitation by any means, but certainly putting offers or open to offers there.
Working for them. Invocare, that's our M&A theme.
Yeah, dying for that one, eh? That's another M&A theme, and TPG upping that bid to $13 per share. So a little bit of brinkmanship there. Obviously, Invocare rejecting the last offer, which was around, what was it, $12.50, $12.65, I think, thereabouts for the company. But while playing hardball, and clearly, so far so good.
Yeah, all right. Karoon, I put that one on the list because energy did relatively well overall. Its shares were rising. It has brought back on its Brazilian facility, so brought that production back on. It did enter maintenance work, and so now it's going to be hitting about 32,000 barrels of oil per day from those production wells. Now, the stock has been under a bit of pressure so far this year. You know what else has been under pressure today?
Yes, I do, and I think you're probably the best position to speak to it because you spoke to the CEO a little bit earlier as well, didn't you?
No, I didn't, but thank you.
No, Gagan did, didn't he?
Yeah, it was. It was Andrew.
Whoops.
Let's bring Andrew in here. No, I'm kidding. All right,
Come on
Elders. Elders was actually, closing the day down by 13%. The brokers will be out on this one tomorrow, most definitely. It cut its dividend, first half profit down by 47 degrees, pointing to weaker conditions. No new CEO named.
Yeah.
That was the stock of the day. Shall we take a listen? Maybe we'll do that a little bit later on.
We could do. Nathan Summer-Sumdaram was talking about it though a little bit earlier, and he's been bullish on the space for a while. And I like it, one, because I like to eat lots of grains, but also two, that whole notion of food security, with climate change, issues with geopolitics, just a huge tailwind for the business. And well, he was always bullish on it, so take that with a pinch of salt. But he says that we saw this big run up in prices, this big multiple expansion effectively in the business, and that if you look at the underlying trends now, the business is now trading much more in line with what we saw pre-pandemic, a bit of a normalization. So an interesting interview that will be on your platform, of course, too, because he also talks about GrainCorp and some of the other ag plays in the Australian market. Okay,
and so we'll leave that there. We'll get to the stock of the day, find out with David Novak from Wealth Within. Who was our other guest today?
Good question.
I don't know.
Blank.
Me too.
David Lane, because I remember it was a triple D. It was triple Davids. It was Koshy, David Lane, and David Novak. How could we forget?
The COB can't come soon enough for us. Let's bring in Josh Gilbert. He is joining us from eToro to make sense of the day. Hey, listen, Josh, great to have you here. Is Kyle right? Just like low volumes, real lack of volatility, just a bit of a fizzer today.
Yeah, I think he's absolutely bang on. I think we've seen it for a while now in terms of those volumes dropping, just across not just Australia, but we've seen it broadly across the US as well. I think investors just sort of sat on their hands, sort of maybe waiting for something to happen, and we haven't sort of quite seen that for the time being. We're not sort of really seeing any sort of movement just yet.
So what about that lead that we got from Wall Street? Because there seems to be a little bit more movement there, and we remain fairly concerned about, obviously, the global backdrop. Also combined with the fact that, we're getting these Fed speakers over the next few days, there's always a risk that they could come out hawkish, maybe try and talk out some of these cuts in the market. So, I mean, what we should be looking out for there? Because clearly keeping investors on their toes.
Yeah, I mean, look, there's plenty to worry about, I think, from an investor perspective right now, whether that's the debt ceiling, whether it's the banking crisis, whether it's inflation maybe not coming down as fast as the Fed are hoping. Although I think that's probably a positive that we can take at the moment. When we had that 4.9% number, I think getting a 4 at the front of that was the key there. I think the banking crisis is still sort of hovering over. I think that's still a worry for investors. So I think there's a lot for investors to sort of try and digest at the moment, and I think that's quite difficult. If we do get a hawkish Fed coming through, I think again, Powell, has been resilient in terms of saying that there won't be any sort of rate cuts this year. So it'll be interesting to see if other speakers sort of follow suit. If we have that sort of confirmation from their side that we're not going to see rate cuts this year, even though I think you said a moment ago, Kyle, that markets are pricing in 75 basis points worth of cuts already this year. And I think that's the key point here. If we sort of do get more hawkish tones from them, then that's going to be really important, because markets are sort of running with the fact that we are going to see cuts this year, and a continued fall in US inflation is needed, right? We need to see inflation to keep coming down in order to support the Fed pausing, staying at 5%, and then cuts coming at the latter end of the year. But we might see some speakers this week try to make sure that the market doesn't keep pricing all of that in.
Okay, so Josh, we are getting these dribbles of corporate earnings here in Australia, but I think it's worthwhile pointing out that we're still seeing quarterlies come through in the United States. And this week, we have a lot of those big retailers, so the Home Depots of the world, the Walmarts, the Target. I mean, that's going to be invaluable insight into the state of the US consumer, right? What are you expecting?
Yeah, absolutely. We've also got retail sales from the US this week as well. So a really good insight this week, I think. S&P 500 earnings so far, I think we can take the positives from it. I think investors probably breathing a bit of a sigh of relief. 75% of stocks beating estimates. We're seeing, earnings estimates rising as well. I think, it was another resilient quarter. I think it buys sort of the market time to see, the peak of interest rates coming in, to see that potential of interest rates being cut at the back end of the year, because we were obviously seeing a lower base, right? We definitely saw a lower base. I think that's fair in terms of where we're coming from. But this week, will be key. Consumer discretionary in terms of Home Depot, that's been the best performing sector so far. Biggest surprise as well, 55% rise in earnings there. I think in terms of like Home Depot, that they may struggle. I think markets are expecting earnings and revenue to decline. That would be really interesting. That would be the first time that they've seen profit and sales decline in almost 3 years as well. But it will be, are Americans ultimately cutting back on spending on home improvements, renovations? Like we said a minute ago, we haven't got the brightest of economic outlooks at the moment in the US. And then that turns you to Walmart in terms of, are those consumers then down trading? It's a consumer staple. We know how well locally, Coles and Woolworths have done here. I would expect that to be a complete opposite scenario of what we see from Home Depot. I think they would be poised to deliver, better than expected results. I think that, consumers are going to be going to those discount stores such as Walmart. And I think the key there will be guidance. If that's good, then I think given the sort of the current environment, I would expect it to be good. I think people will continue to turn to those discount stores and down trade, and I think the stock will react that well. And I think that will be the key coming away with it, as it always tends to be with earnings season. It's always that focus on sort of forward guidance, really.
Deals getting done on the ASX, but where deals don't seem to be getting done just at the moment is in Washington, D.C. There's that debt ceiling potentially overhanging the markets. Now, of course, this is complicated in terms of what it could mean, and who knows whether a deal will get done just in time. But, clearly this must be the biggest known unknown, perhaps, if you will, for market participants, at least over the next few weeks.
Yeah, look, absolutely. I think obviously retail investors hate any sort of uncertainty, and that's exactly what we're getting here. I think obviously a default would obviously be catastrophic for a number of reasons. But I think from an investor's perspective, I think there's enough incentive on both sides to sort of reach, a deal given the, the effects that it could cause. So I think on one side, yes, it's a huge worry for investors, but I also think at the same time, why worry when there is such a big incentive to sort of get this done? But obviously, we've got 1 month Treasury yields, they're up at record highs. We've got gold prices up 12%. We're seeing that sort of a bit of a rush to sort of safe haven assets, tangible investments, because I think that this is the worst case scenario, in most cases, and it is a possibility. I think unlikely, but investors, as I say, don't like that uncertainty, so they're positioning for that. But we've got to remember that if this doesn't come through, we're going to see government spending plans, completely evaporate. Banks are going to come under more pressure. We're going to have a hole for spending in terms of infrastructure, clean energy, those types of themes from investors. So I guess it's about trying to sort of position that portfolio if this does happen. But as I say, the likelihood in terms of the incentive to sort of try and get a deal done, like I say, I think investors are sort of trying to brush it off at the same time, even though there is a worry there.
Josh, really appreciate you shining some light on what was a fairly mundane Monday perhaps, but nevertheless plenty to look forward to. Let you get back to your week. Josh Gilbert from eToro there.
Thanks, guys. Have a great afternoon.
Yeah, you too. All right, so we teased you with this. We've got Elders as the stock of the day. David Novak from WealthWise and David Lane, apologies, from Ord Minnett. Let's listen to what they have to say.
Very disappointing, and the market's obviously been very disappointed by it as well. They gave their full year outlook and expected that the first half would be quite strong, but unfortunately that hasn't been the case. And they spoke about, I suppose, a number of different issues that they've faced. Yeah, it's probably one I'd be steering clear of at the moment. But then again, when you look at the share price, for those that are brave enough, it could be an opportunity, but it's probably one that I think has too many risks at the moment, and I'd be waiting until we at least get a CEO announcement.
Again, it's very much the case with a lot of analysts. If they have an overly bullish expectation, then beware. It's like anything. So I've become a contrarian when there's too many, whether they're too bearish or too bullish. You take a contrarian view in my experience. But look, getting it so wrong. This is a pretty poor report. They are talking about a turnaround. Well, it all depending on weather conditions. But look, for me, the sentiment, the technical damage is done. And you can't rush into a stock like this. You've got to wait till it consolidates. I'd switch out of this and go to GrainCorp.
Well, that was quite the segue into our leaders and laggards segment. Of course, let's start with the positive and see what led this market higher. And there you go. There's that M&A thematic. Yeah,
and Invocare still trading at a bit of a discount to that offer price from TPG, and it might even be a discount to the original offer price as well. So still up 12 and a bit %. So watch that space, and whether the board there can continue to perhaps haggle things higher, because a lot of the analysts that I spoke to just after that first bid came through were saying that maybe $14 is probably more fair value. So could potentially work that thing a little bit higher. But nevertheless, that's probably the good news of the day. There was a lot of gold plays out there too, and you could potentially argue, hey, well, long live Newcrest. That's not going to be around much longer. Investors need new ways to get gold exposure. Yeah,
at Silver Lake Resources, we mentioned it in relation to some news around St. Barbara, an improved offer for one of its operations coming from Genesis. As Silver Lake, it looks as if the St. Barbara board is not engaging with it, but still had a good day, up by 7%. Now, News Corp, we've seen Macquarie weighing in on its third quarter earnings, saying that they beat its expectations, actually lifted its price target by 4%, around about there, to $24 a share. So you can see it's above that target price right now. And well, need we say anything about Regis and Evolution?
No, I think the story's been told, but we'll go across some of the laggards now. And well, we've told this story quite in depth today. Elders down 12.8% by the end of the session.
But if you'd like to sort of get the nitty gritty on that, we did speak with the CEO, Mark Allison, and that will be up online shortly if it's not already there. Also depends on when you're listening and watching this. But I think it's also worthwhile to point out that Nathan Samasundaram, who's been a long time believer in this story, even though it's done nothing over the past 12 months, he's, he fronted us, of course. Of course, we called him right away. Come on, Nathan, what do you make of this? What are you going to say now? And he's still supportive, right?
He was. I did have the privilege of speaking with Nathan this afternoon, and he was outlining the bull case and spoke a lot about the technical factors that can drive, obviously, markets in the short term, but also just sort of discussing that we have had a pretty big run up in the share price in particular, and that perhaps this is a bit of a reversion to what was a longer term trend anyway, and now, offers a decent time to get exposure to the space, and also spoke about just the different areas of the ag space as well. GrainCorp's results were last week and treated very differently by investors. The investment case there, as well as even Inzotech pivot. So managed to touch on a few little bases there as well. ANZ, you can see on your screen, that's the ex-dividend story, of course.
Yeah, and a lot of these lithium names were just so strong last week after we had M&A to start as well with, I don't even know if it was on Monday, but Alchem and Livent, however you say it in the States. So just giving back a little bit of that, and of course still got Albemarle in the wings, so that was down by about 4%. In the small cap space, let's take a look. I went through these earlier and I didn't see a whole lot of commonalities, except that 11.11% lift for Arizona Lithium and WA Resources, which I think that is, which is kind of a coincidence to see. Flip side though.
Yes, indeed, and Elixir Energy, Avita Medical. That's we've actually, I think, spoken to Avita Medical.
Yeah,
before.
but I couldn't see any news. I could be wrong. I really didn't see any news associated with it. Pact came out with a trading update, and clearly times are looking a bit tough, down by 14%. So that's a pretty in-depth look at some of these leaders and laggards. Let's get again across what's going on overnight tonight.
And we have spoken a lot about the Fed speakers that are coming up. Bostic, Kashkari and Cork. Kashkari is notoriously dovish, I suppose, but has put the case forward for a kind of higher for longer rate settings in the United States. New York Empire State Manufacturing will be interesting because we are looking for those signs of potential slowdown. We already know that's coming through the manufacturing space in the United States, but nevertheless still very influential when we look at the economic cycle there. Just
reading some Westpac commentary about that Eurozone industrial production, saying that a partial reversal is anticipated. This is the March read. Energy-related industries are beginning to show promise there. So we'll be watching that. Now tomorrow, we've got the RBA minute. So we haven't had, today was a vacuum when it came to data here locally. Of course, we're very attuned to whatever the data in China is coming out, which we will get some this week, but also some of those earnings coming through.
Yeah, and I think we actually have booked in Live 360 tomorrow. I think Chris Hulls is coming in. I spoke to him last time about the state of business. We'll have him in tomorrow, I think around 2ish if I'm not mistaken, but nevertheless tune in for that. And JHS, it's not James Hardy, is it? What is it?
It is. It's James Hardy Quarterly.
There we go.
So really good look into the state of the housing market. Been a bit rough. We've had numerous downgrades coming from James Hardy. But again, I referenced we've got some China data on tap this week that will be really important. I also just note as we speak, Kyle, that we've got coking coal in China up 3.6%. We've got iron ore up in Dalian, iron ore futures up by about 4%. So that's a pretty positive way, for this very heavily weighted market to finish here today. And
I have to plug that interview again with Trevor Hewen from Morningstar. It made his debut on AusBiz today, but he spoke a little bit about James Hardy and a new concept that he introduced, which was more or less around the interesting mortgage dynamics in the United States. Obviously, they can fix their loans for 30 years. That has a really big effect on investment activity in the space. So again, listen to that because it's a new one. It brings a sort of a fascinating light to that share price.
All right, look, the S&P ASX 200 is finished up by about a tenth, pretty close to 0.2%, 7,267. I'm just keeping an eye on E-minis in the States, S&P 500 and NASDAQ, mildly positive right now. Of course, a lot of that conversation dictated tonight by the Fed speakers, also by that debt ceiling debate, no doubt, just in case you weren't sick of it.
Yeah, debate, debacle. You choose your...
Also, the regional banks will probably be keeping a very close eye on. I know you will. You've written a view in the newsletter as well today.
Yes, piggybacking off Danny's work last week, we're just talking about some of the issues in the system right now, and we've been focusing a lot on the deposit flight in US banks, but there's also some issues on the asset side, which well, seems sometimes just to be a feature of the system rather than a bug. So gave my 2 cents on that one.
Okay, we've got a day of fantastic guests lined up. Once again, well, Steve Sosnick from Interactive Brokers will be joining us, Sean Hickman from Market Matters, Frank Daniele from MA Financial. Look, the list goes on. Scott Phillips and Ben Clark, a couple of fan favorites, are on the call as well. So looking forward to tomorrow. Plenty to catch up on, though, from today as well.
Absolutely. It's on your website and app. We'll see you tomorrow morning.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.